Good morning, everyone. My name is Mary Malfarah, and I am the Deputy Executive Director for the Electrical Association of Philadelphia. This morning, I'm joined with my colleague, Matt Dibert, our Program Manager, as well as our speaker, Chris Sloan, who I will formally introduce momentarily. We would like to thank Chris from My Benefit Advisor for sponsoring today's program. Just a few housekeeping items. Your mics and cameras have been turned off for this session as we are recording the event. You are welcomed and encouraged to submit questions using the chat feature. My colleague Matt will facilitate questions toward the end of the presentation. As always, we will share the recording of today's session as well as the contact information for Chris Sloan. Now, it is my pleasure to introduce today's speaker from EAP's health plan partner, My Benefit Advisor. Chris Sloan, Vice President of Group Health Plans with 10 years experience consulting with employer groups ranging in size from 2 to 200. I will now turn it over to Chris. Chris, welcome.
Thank you so much for the excellent introduction. Couldn't have said it better myself. Appreciate it. Matt, thank you so much for putting this event on today. We are very excited to talk to the members of the Electrical Association of Philadelphia and some strategies that we've put together for individual and group health insurance in southeastern Pennsylvania. So I've been doing health insurance for 10 plus years now, prior to the Affordable Care Act, and then through the Affordable Care Act and all the different changes. So I've certainly seen how this whole entire system can help businesses and hurt businesses and individuals as well. So, My Benefit Advisor is an insurance agency that goes out there and is recommended by chambers of commerces and by associations to run group health programs. So we do the best that we can to go out there and create programs for members, and specifically to try to find areas where we can get discounts off of medical insurance for the members itself. So, prior to the Affordable Care Act, everybody used to call up the association to be able to get their insurance through them. And then as those laws and those things changes, as things were implemented from 2009 into 2014, it stripped the ability of associations to really offer those programs. So we're trying to get back to those and create programs wherever we can. So that's a little bit of what we're going to talk about today. So if we move over into the slides here, this is a little bit of an agenda. I'm just going to have a quick overview of what's going on in the insurance marketplace. Then we'll go into some cost saving strategies as far as, the ability to utilize health reimbursement arrangements, what is level funding and how that can benefit your business, professional employer organizations, group medical captives, as well as individual coverage, HRAs, which is a brand new concept out there. We handle individual, we handle family insurance too. So, if you're a sole proprietor and you need assistance in those areas, or if you're approaching 65 and you need to be walked through the different components of Medicare, we have a whole department there. And then the last part of the presentation, we'll go through a few employer resources, some things that you certainly need to be paying attention to as laws keep changing in Washington these days. This is one of the scariest charts out there. This just shows the cost of healthcare since 1999. And it's not just for large businesses, but it's for small businesses as well, right? Most of the time, small businesses think that they're the ones getting crushed with rate increases year over year over year. But as you can see through the chart, it's a little bit more volatile for the small businesses. There's a little bit more fluctuation, but the trend is the same. So, large businesses are getting hurt with the increases year over year, just the same as small businesses over the last few decades. And then if you take a look, it's not just the premiums increasing over the last decade, right? It's also the deductibles keep going up and up and up, right? And when you kind of compare that with the premiums and you look at what are your earnings as employees or as businesses, versus the inflation, this is another just powerful chart that shows you, while some years might be okay increase-wise for small businesses, other years aren't, and the trend is just going to continue and continue. So, what can we bring as value to the Electrical Association of Philadelphia to try to mitigate some of this and try to keep these increases down year over year? And let's utilize all the different strategies that are out there to make an impact, especially for your workers that are going to get large bills if they go and try to use the insurance these days. So for 2021, I think really the theme here is we have the pandemic that's been going on since last March, and there was a significant drop in the utilization of insurance, but it didn't necessarily correlate to like a drop in rates. So I think it's interesting that a lot of the Affordable Care Act compliant carriers out there, so that would be your Independence Blue Cross and your United Healthcare in Southeastern PA, had 4 to 8% increases. So, while there was still a big drop in elective surgeries and just lower utilization of the plan as well, there was lower increases compared to last year and the year prior. So, 4 to 8%, most businesses these days are just going to take that and move on. But that's actually a perfect opportunity for you to kind of take a look at your whole program in general when you're not under the pressure to do something, when you get that 10 or 15% renewal like the other years and you're scrambling at the last minute. So, there are other strategies out there that can maybe get those increases down or even reduce your rates overall. As far as the individual and the family market, we're seeing about 1 to 3% increases there. Independence Blue Cross is still the monopoly in the area for the individual market. There was a new carrier that came in called Oscar. We haven't seen a lot of members go in there yet, but at least there is some competition in the region. Usually we like competition because it keeps the carriers' increases lower than they normally would be. So just think of it as there's two different pools, right? All the small businesses from 2 to 50 employees are grouped together. And so when you have an Affordable Care Act compliant plan with Independence Blue Cross and United Healthcare, those carriers are going and negotiating those rates with the Department of Insurance and getting them approved. And then they're leveraged throughout the broker community. And then same thing on the individual side, right? That is a separate pool in itself. And the individual pool tends to have less products available. It tends to have higher pricing than the group market does. And they tend to increase at a higher rate over time. So if we took a look at what the 2014 premiums were for a small business and compared it to the individual and family market, they were very close in 2014. But what we've seen over time is that there's been a pretty big divergence between the two. So if you're a family in your 50s with children, there's probably a $3,000 savings between comparable plans on the individual market versus the small group market as far as premiums go. So, when the Affordable Care Act came out, we saw a lot of businesses actually drop employer-sponsored coverage and send everybody to the individual market. And then over time, as those two pools have diverged in cost, we've seen a lot of businesses actually putting back in group plans. So, something to keep aware of. And, we continue to see the individual market probably going up in price over time as well. So, whether you need help with a small business or whether you need help as an individual or family, we're here to assist. And even if you're eligible for a subsidy on the new Pennsylvania State Penny Exchange, we can certainly help you there as well. So that's a little bit about the Affordable Care Act market, right? So another concept out there that a lot of businesses are taking advantage of is called level funding. So think of level funding as, how insurance was done in Pennsylvania prior to 2014 when the Affordable Care Act was implemented, where you're underwriting your own group is on its own, right? So when you're in the Affordable Care Act, you're in the pool. So advantages and disadvantages of being in the Affordable Care Act pool. First advantage to that is that if something happens within your employee population, right, a large claim, somebody has a chronic illness, high utilization of prescription drugs, you're protected as a business because you're subsidized by all the other 2 to 50 employers in the region. When you are out of the Affordable Care Act pool, right, you might be able to get better pricing on your own. And, that's an advantage to it, right? But the disadvantage to that is that when you're out on your own in the level funded option, your claims are subject to your renewal. So if you tend to run higher claims, you're going to get higher increases. And so the importance of picking a good partner is to be able to utilize these level funded programs and then monitor them over time. All right. So what level funding is it's pulling you out of the Affordable Care Act pool of businesses. And so there's advantages and there's disadvantages to doing that. One of the advantages of pulling yourself out is that you can get below market rates. The disadvantage is that your claims are factoring into your renewal. So if you actually have higher than expected claims utilization, you'll get higher percentage increases year over year. One of the advantages, though, is that if you don't utilize all the claims that you set aside, you can get back half of that. So with Aetna's program called Aetna Funding Advantage, if you set aside $100,000 in claims and you only use 50,000 of them, right, you ran a surplus. And so you'll get half of that back, or $25,000 as a credit on your invoice when you hit month 15. And then United Healthcare has the same type of program with All Savers. And so All Savers also gives you a half, 50% back on the rebate at the end of the year as well. We're the only agency in Pennsylvania that has a 2% discount for the Philadelphia Electrical Association with Aetna and United Healthcare. So we can do everything that insurance brokerage can do, and then we try to go out and create programs for the associations where we can. So it's just us trying to go out there and create, discounts for you. So, going back to what we talked about in the beginning, was everybody used to call the chambers and the associations to get association discounts or to join the program. So, we went out on our own. We contacted Aetna and United Healthcare and said, listen, we need to do something for the Electrical Association of Philadelphia. Could you get us a discount through your programs? So Cigna also has a level funded program, but it starts with a minimum of 20 enrolled and 25 eligible employees. And then we have another concept called Franklin Health, where we're grouping together employers, and we're really trying to drive down not only the medical costs, but we're renegotiating the pharmacy costs as well to try to drive savings there. So those are a little bit longer term approaches with those two solutions. So just going back into what are some strategies for you as employers to implement within your own programs. One thing I like to get everybody to understand is that when you're dealing with the Independence Blue Crosses and the United Healthcares with their Affordable Care Act compliant plans, it's all rigged behind the scenes. So what I mean by that is insurance is just two ends of a spectrum. And on the spectrum, right, you're either paying for it in your monthly premium or you're paying for it when you go and use it, but it all evens out at the end of the day. So if we took my premium per month on a platinum level plan with Independence Blue Cross and we annualize that out for the year and said, okay, we know that's what my annual premium is to have the plan. And in the event of a catastrophe and I got seriously injured, right, what's my max exposure on the plan itself or the out-of-pocket limit? If we add those two numbers together and then we go and do the same exact thing on the bronze level plan, and we add the annual premium and we add the deductible and the out-of-pocket limit to it, right? They're going to come out relatively close to each other, but the bronze usually wins out in the long run. So the point being that it's really just a cash flow situation. And so one of the things that you need to make sure that you're not doing is over-insuring yourself with platinum and gold level plans, right? There are lots of other different mechanisms and programs that you can implement where you can hold on to the extra savings by moving the program down to the silver or to the bronze level, right? And backfilling it with all the premium that you would have spent on the platinum and the gold, right? It's almost the scenario of if I have a Ferrari, right? And I put it in my garage and I never drive it, then what was the point of having the Ferrari to begin with? And that's kind of the concept with the platinum and the gold level plans is that, right? It's nice to have it. And then when you go to use it, it's not going to cost you that much. But if you don't ever use the platinum plan, Independence Blue Cross walks away with a nice little profit on you. So a health reimbursement arrangement is when an employer takes the savings of the premium that they would have spent on the traditional style plan. And again, they backfill it in there. And then if employees don't end up using those dollars that are allotted to them, then it reverts back to the business and you can roll it into next year's programs. So for example, if you had a platinum plan and was all copays or a gold plan and was all copays, you could move down to the silver level, still have copays for your routine items, your primary care visit specialists, urgent care prescriptions, but you could take more risk in the form of the hospitalization surgery deductibles and then backfill the premium savings in there so the employee feels, right, like they have a gold or a platinum level plan, but you as the employer are holding on to those extra dollars. And then you would probably notice that the utilization of the money that you set aside wouldn't be more than 50%. So, certainly some savings there. And then we have a nice little case study here about other employers that we did this for. So, going back, you can do health reimbursement arrangements with level funded programs as well. And so again, we're the only agency in Pennsylvania that went out and got a discount for members, 2% with Aetna, 2% with United Healthcare. And we're hoping to get more carriers on board with this as well. We're hoping to get
Blue Cross Blue Shield, and some other ones. So we're out there trying to get discounts where we can for you. Just to give you a sense too, right? Aetna put all of their eggs in this basket. They don't sell any Affordable Care Act compliant plans. So Aetna is very, very aggressive right now. So, what we're seeing is with Independence Blue Cross only having 4 to 8% average increases this year, that means that Aetna is really trying to be aggressive in United Healthcare as well to get people into their program. So, if you're getting a 4% increase with Independence Blue Cross, it's very possible that you might get 10% decrease with an Aetna program. So, you could get a 14% swing on your renewal. So again, the surplus that you have at the end of the year gets reverted to you. I have one employer that we're working with. They have $80,000 set aside in their claims reserve as a surplus. So they're very excited to get $40,000 back. And so, that was a really good case study scenario for us. And so this is just going over a case study. Somebody got an 8% increase and they were with a fully insured carrier like Independence Blue Cross or like with United Healthcare. And we actually moved them to the All Savers program. They got a decrease on their rates and then they've been running pretty well. So it just kind of gives you the financial impact that you're looking at here. And so when you get these decreases, remember that works out for you over a 5-year period because you're kind of resetting your baseline medical costs. Another concept that I think is gaining some traction in this region that has been a little bit more popular in, say, the New Yorks and the Floridas is what's called a professional employer organization. I think it's certainly a bigger impact these days during the pandemic. What a professional employer organization does is you're outsourcing not only just your payroll, but you're outsourcing your benefits and you're outsourcing transactional human resources, and in some cases, workers' comp and 401k. Think of this as I'm going to join in with other businesses, right? The same concept of what an association plan used to be that we can't do anymore. But this one, I'm going to join on to the tax identification number of the professional employer organization. They're going to handle my payroll. They're going to do my benefit administration. They're going to handle all of my human resource transactional items. So the additions, terminations, changes, they're going to get me a handbook. They'll go through trainings for my business. This is kind of the next evolution of outsourcing administrative tasks. And so the idea behind it is if I have a 25 employee company and I'm purchasing insurance a la carte through Independence Blue Cross, and I'm buying, Delta Dental or United Concordia and so forth, and all these different benefit packages, and I have a human resource a representative in my company, and we have a payroll company. The idea with the PEO is let's stack up all of those different line items and let's go purchase them as a large business with hundreds of employees and hundreds of employers. We'll probably see 40% savings off of the benefit costs alone. And then what we'll do is we'll take some of the savings of the benefit costs to pay for all the other administrative tools and resources that you're going to get. So usually you're going to walk away with something around a 20% savings by utilizing a PEO. And what you get with that is infrastructure. So, you don't have to deal with handbooks. You don't have to deal with HR questions anymore. All of your employees get benefit portals. So, the PEO is kind of your ultimate outsource of all of these administrative items. And it's not necessarily there to replace anybody that's in a human resource role. Our job, or the PEO's job, is to say, listen, you should be working on projects that are $850 an hour, not $8.50 an hour, which are transactional items of additions and terminations through a benefit program or, assigning out training courses. So, that's what a PEO is. It's your ability to group together with other employers to purchase benefits as a larger group and, use some of the savings to then build infrastructure for your program. So these are things that, we want you to focus on your business and not necessarily dealing with the administrative functions in your business. So this kind of gives you an idea of the financial impact of working with a PEO, right? Certainly the amount of time that you spent, right? Your time has value to it. And so, you certainly will spend less time dealing with human resource questions or the compliance that goes with running a benefit program. You'll also see savings on your payroll. You'll see savings on your benefits and workers' comp in some cases if you're including that. So usually with a PEO, we see the businesses that have about 15 employees start to really take a look at these. So we're the only agency in PA that also went out and created our own PEO just because we saw clients wanting to take a look at them. So we figured, might as well have a resource for those businesses that want to explore those options. And again, right, just going back to that kind of concept of resetting your baseline rates, right? And once you move to a PEO and you get a 40% reduction in your medical insurance, despite the fact that you're offsetting some of it with administrative costs, you're still, again, resetting your baseline costs over the next couple of years. So this is a great exhibit that kind of shows you over a 5-year period what your rates would look like, once you've reset it, and then what your savings are looking like over a 5-year period. Another concept out there is called group medical captives. So again, right, pulling yourself out of the Affordable Care Act pool and joining in with other employers. And this one's on a self-funded basis. And so with a group medical captive, you're really trying to change the long-term trends of your employees and how they're utilizing their plans. And so this has protection, again, because you're pooling with other employers, so that if you individually as an employer have a bad year, you're not going to have the same exposure that you would on, say, like a level funded program, because with a captive, right, the other employers are there to help subsidize you as well. So these are really popular too during the pandemic. So because of the drop in utilization of elective surgeries and just using of health insurance in general, we're seeing all-time high rebates through group medical captives. And these are solutions typically for groups that have 25 to 200 employees in their business. A new concept that came out within the last 2 years is called an individual coverage HRA. So think of this as if I'm a newer business and I don't want to get into the offering of a group health insurance plan and everything that goes with it. What I can do is I can say, listen, employees, I'm going to give you all a fixed dollar amount through a health reimbursement arrangement, and you go pick up anything that you need on the individual market. And so it gives the business the ability to give the employees tax deductible money, right? And then it lets the employees be able to go and choose which coverage is best for them. So we find this really, really critical for new businesses starting off that aren't ready to do group health plans. Or conversely, I really see this as a value in the 50 plus market where your claims are factoring into your renewals. If you're a business, right, with 50 plus employees and you're getting really high increases because you have some employees that have ongoing medical conditions, this is your ability to say, you know what, we can't sustain this anymore, but we still want to offer a program. We can get better rates on the individual market. Let's go that route. So, for small businesses, as I said, kind of the beginning slides, we saw the individual market and the group market diverge in price, and the group's more affordable. But when you get into the 50 plus market and your claims are factoring into your renewals, we've seen a lot of employers just keep getting hammered with double digits year over year over year, to the point where they can't sustain it anymore. And so this is a great alternative for those groups, where your rates are really starting to get sky high. For a while there, a lot of insurance brokerages out there didn't want to deal with any type of individual and family health insurance. And there was 2 years there where the insurance carriers weren't paying brokerages at all either. We stuck through the whole thing. We even helped people out when we weren't getting paid on it, because we understand the importance of working with the individuals as sole proprietors that don't have access to employer-sponsored coverage. So, if you do need help, again, on exchange, you would only use it if you're eligible for the subsidy. And then if you're not eligible for the subsidy, most of the time you purchase off exchange. And so we do have a whole team of people that are willing and able to assist you in the event that you need help with the individual. And again, Independence Blue Cross is the Goliath in the room. And there's lots of different products to try to figure out what fits your needs within there. And then again, just understanding that it's all rigged behind the scenes. So the more and higher level that you spend in coverage, right, you're just bringing down the costs in the plan. So you certainly want to make an informed decision as far as which plan you're purchasing. We're seeing lots of people turning 65 every single day. So this is probably the fastest growing department that we have right now. So Medicare, you have to get Part A, Part B, and all these different supplement policies. What are they? How do I accomplish all of that? Our team is willing and ready to assist you. How is it going to coordinate with your group health plan? We will educate anybody. So it doesn't matter if it's one of the employees, if it's a family member of one of the employees, please, we're here to be a resource. Actually, our Medicare team is the go-to for our parent company, USI Insurance. So, we're here and we're able to help anybody go through the Social Security website, pick up those different supplement policies. And so, just check out mybenefit advisor.com/Medicare, and you certainly can get in touch with any one of my coworkers. So we're going to move into some employer resources. So these are things that are really critical that have happened in the last 12 months that, if you haven't updated your handbook, you certainly need to go to. So, updates with telecommuting policies, if you're still doing that, or working from home environments, communicating new policies that have come along since the pandemic has arrived to your employees, anything that has to do with paid time off. So these are just things that we've been recommending to our clients and to association members in general that, hey, if you're doing this, and changing things around, you got to get them updated in your employee handbook. Human resources, right? So, we talked a little bit about the PEO and how you can outsource those things. We at My Benefit Advisor saw that a lot of the small businesses within the associations need more assistance with human resources. So we made a heavy investment in a company called Think HR. Think HR comes in 3 different components. It's Comply, Live, and Learn. And what Think HR is your ability to talk to human resource professionals or get human resource information from a reliable area, and then also be able to train your employees. So the live is what I think is the most important. It's your ability as a business owner to talk to anybody that's a SHRM certified human resource professional. And so, with Think HR, you can write them messages on a queue and they answer it, or you can call up the 800 number. They'll coach you through an urgent situation or what to do if you're confused over a specific law that just changed. Comply is a really cool function as well. It's like your reliable Google search engine. So if I go in there and I put in, what is FMLA, it's going to give me, all of the results that I need to know. And I know that they're good to click on, right? If I Google FMLA, I might check the first couple links on the search results of Google to see which one actually looks credible. So with Comply, everything is in there. Hiring guides, termination guides. There's some really cool COVID stuff too. Essential business letters. That all you had to do was put your letterhead on and you could give it to your employees. So, at the event that there was a lockdown, it was pretty powerful that all of our clients that were using this were able to get their employees letters they could present in the event that somebody was questioning where they were going. So, it has lots of different stuff in there. It has webinars, and when anything changes, like for example, the COBRA subsidy that just went into place with Washington, they've been doing webinars on a weekly basis, trying to give everybody updates on what's changing from that standpoint. And then the library with Learn is fantastic. So, myself at our agency, we go through a bunch of different trainings every single year. One of them is IT security and how to not get hit with phishing scams. Another one is unconscious bias in the workplace. And the third one is sexual harassment training. So there's over 300 plus training courses that you could assign out to your employees. So this is, again, an investment that we made, and every one of our clients gets access to Think HR. And then moving away from paper, right? So insurance carriers were always notorious for having tons and tons of paper involved in them. So we made a decent investment recently in a company called Benefix. And what they do is they're a quote to enrollment platform. So normally, right, if you're a small business with 15 employees and you have to change insurance carriers, it's 150 pages of paperwork. I know this because I've done them. And then we have to go through every single thing and make sure every T is crossed and every I is dotted. So, using Benefix, it allows your employees to do all of their enrollment on their mobile phones or at their computers, and allows you as the group administrators to do all of your paperwork online and fill them in the PDFs, and so that we can submit all of it to the carrier in one nice package. And if you're getting to be a larger size employer, if you have not implemented a year-round benefit administration system, you certainly need to start taking a look at that off of your renewal cycle. So we use a company called Employee Navigator. And so that's for businesses that typically have 20 plus employees, and that will give your employees the portals. It'll integrate with payroll. It'll have your handbook built into it. It'll have paid time off on there. And so it really helps from kind of the life cycle of the employee from hire all the way through termination. And so, we put links in there to Think HR as well. It's certainly a very, very powerful tool. We have clients that are just coming to us just for Employee Navigator. And again, we include that with our services for clients of the Electrical Association. So this is just a little bit to go over some of the benefit enhancements that we're out there trying to do. So, providing discounts through associations, Also, benefit service center, real quick, what that is your ability to send everybody to us. We're the insurance experts. Let us handle your employees' questions, their claim issues, whatever it may be. We have high level contacts with all of the insurance carriers, so we certainly can get things done a little bit quicker than your average employee does. We don't want them waiting on the 800 number, getting two different answers if they call Independence Blue Cross's customer service team. So let us call them on your behalf. So we've had Think HR implemented, the online enrollment systems. Another interesting one is the college resources. So we're working with a company called Goodly. And what Goodly is student loan repayment. And so as part of the legislation that was passed back in April of 2020, it allowed businesses to help employees pay off student loans. So if you go to somebody that's in the millennial generation or a generation below, and you said, listen, we do a 401k match. Well, there's lots of those employees that have just massive student loans out there. And if you said to them, listen, we'll take of the 6% we were going to match on your 401k, we'll put 3% towards your student loan and the other 3% to your 401k. I think that employee would certainly take advantage of it, and it helps them pay those loans off quicker. So working with a company called Goodly provides the employer the ability to funnel pre-tax dollars or tax deductible dollars to employees to help them pay off their loans. And then the technology with Goodly is kind of cool because family members can also help those employees pay their loans off quicker by putting contributions in. So very interesting, and probably the next type of employee benefit when we talk about working for a company. You have your 401k, you have your benefit package, paid time off, vacation. And so we think that student loan repayments are going to be the next kind of line item in employee benefit perks. And so again, we have MetLife Dental and Vision as well. So if you need any type of dental or vision program, no waiting periods, no participation requirements, 3 different dental plans, 2 different vision plans. It's national coverage with MetLife. So that's something that we grouped together the Electrical Association with, and went to MetLife and said, listen, we need to make a program for them. So you could get a root canal on day one. I hope you don't have to get a root canal, but if you did, we certainly, you wouldn't have to wait with this type of program. So these are all the enhancements that we're out there trying to do. So again, we can do anything a traditional broker can do, and then we're trying to create programs with carriers where we can on your behalf. And so that's the end of the presentation. I do see that there's some questions that were submitted ahead of time, one of which was, how do you get better rates for small group insurance? So that would be through level funded options, utilizing health reimbursement arrangements, utilizing HSAs, which are health savings accounts. So those are different areas where you could get better rates. And then another question is, do rates differ per county or location? So that's a great question. So the carriers have rating regions across the state of Pennsylvania, and southeastern Pennsylvania has its own rating region. So if you live in the 5-county area, or your business in the 5-county area, you're rated in that area. But once you go to Reading, or you go to Lehigh Valley, or you move out into the central PA or the northeastern PA regions, yes, they are different rated plans. So you would probably see different carriers operating in those spaces, and then the rates would probably be a little bit lower than they would in, say, the Philadelphia market. And that just has to do with real estates and hospital reimbursements and provider reimbursements. But if you live in the 5-county region, all of your rates are the same. And again, New Jersey is its own state too, that has its own state laws. So different carriers operate in New Jersey as well. But the same associate, like if you were an association member that in your business was based in New Jersey, but you're doing a lot of your business in Philadelphia, our 2% discounts with Aetna and United Healthcare would still apply in New Jersey. So, it doesn't make a difference anywhere in the tri-state region. We'd be able to help you. Is there any other questions that I can answer at this time?
If there's any questions, please put them in the chat. We'll give a few moments if there's any additional questions for Chris. Okay.
Well, I appreciate everybody's time. If you want to take a look at more of what we have available, we have a co-branded website that we just launched. So if you just go to eap.mybenefitadvisor.com, everything that we just talked about today will be on that website, as well as all the different solutions, compliance updates, webinars, podcasts that we've been putting on throughout the last year. So, please visit that website, click the COVID Read More, and you'll just see a wealth of information as far as the carriers and our solutions go. And, again, my name is Chris Sloan from My Benefit Advisor. We're here to help you, and look forward to meeting everybody at some point in the future here. So thank you for having me today, Matt, and thank you, Mayor.
Thank you, Chris. I would like to thank everyone for joining us today. And again, thanks to Chris for his presentation. And once again, to My Benefit Advisor for sponsoring today's session. We will send out Chris's contact information as well as the link to this video shortly. Have a great day, everyone, and be safe. Thank you, Chris.